Let me quickly talk to you about IRS Form 1040-ES, line-by-line instructions. Let's talk about estimated tax worksheet for individuals. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Q Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you're to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about IRS Form 1040-ES, estimated tax for individuals. What is it? I mean, as we all know, income tax is a pay-as-you-go system. So if you are an employee, you pay federal withholding as a part of every paycheck, right? Every 2 weeks or every week or every 30 days. But if you are self-employed, you might have to make quarterly estimated tax payments toward the amount you expect to owe the IRS, or you might have something called an underpayment penalty. So this payment should include both your income and self-employment taxes and are reported via Form 1040-ES. We're going to talk about it today. Now, who pays estimated tax? Not all income is set up so that taxes are deducted at the source. So if you are independent contractor or a freelancer, for example, you don't have tax deducted from your pay. So earnings from interest, dividends, and rent, taxable unemployment compensation, retirement benefits, and the taxable part of your Social Security benefits are other examples of income that is not taxed at the source. So if you have such income coming in, then you should pay the estimated tax. Very important. And can you really avoid the tax? Now, if you're wondering you can avoid quarterly tax payments, the answer is yes. But you got to meet specific criteria. And so you don't have to pay estimated tax payments for the current year if during the prior tax year, you had no tax liability, your tax year was 12 months, and you were a U.S. citizen or resident alien. And if you have other income that includes W wages, you might be able to withhold enough to cover self-employment taxes or additional income taxes to avoid IRS estimated tax payments. Nonetheless, though, folks, in some cases, you might still need to make estimated tax payments. For example, let's say you receive a substantial amount of taxable income not subject to withholding. You know, you won the lottery or you have a gift from a relative. Those are important. So you might make estimated tax payments for taxable income that comes from stock sales, sale of house that does not qualify for the exclusion, interest, dividends, rents, lottery winnings, and so on and so forth. Now, the estimated tax payments for the year are usually due April 15, June 15th, September 15th, and January 15th. Now, if the 15th falls on a weekend, on a Saturday or Sunday, then you have to think about the next working day. Now, the one thing that's important here is that you can make estimated tax payments using any of these methods. You can apply your last year refund to your current year estimated tax. You can mail a check or a money order with Form 1040-ES. You can use the Electronic Federal Tax Payment System, the EFTPS, to submit quarterly payments electronically. You can visit www.eftps.gov or you can call 1-800-555-4477. You can actually make payments weekly, monthly, or quarterly. I mean, the IRS is not asking you to make payments quarterly. You can actually make them weekly if that suits your budget. And you can schedule payments up to 365 days in advance. And so you can also learn more about credit card options at www.irs.gov. Remember, though, if you use credit card, you might be charged a convenience fee. And now, when should you file Form 1040-ES? You must make estimated tax payments and file Form 1040-ES if both of this apply. So your estimated tax due is $1,000 or more, and the total amount of your tax withholding and refundable credits is less than the smaller of 90% of your current year tax liability or 100% of your past year tax liability. One thing I want to mention here is that fishermen and farmers have different rules, but we covered that. We covered this on another show called Schedule F, so you want to check that show to learn more. And special rules exist for higher income taxpayers. So for example, your 2020 AGI, adjusted gross income, might be more than $75,000 or $150,000 if married filing jointly. And so this is very important. Now, when it comes to calculating estimated tax, the whole thing is based on an estimate of current income. So to help with estimation, you can start with the previous year's federal tax return. So you want to look at the taxable income, tax paid, credits, and deductions from the previous year and compare it to the current year's number. All right. So to the numbers, you have to see, you have to do a pro rata. And the Form 1040 ES package includes worksheets to help you account for differences between the previous and current year's income and calculate the tax you owe. And if you're filing electronically, the software will do that for you. But if you're filing manually, the IRS has comprehensive instructions as to how to calculate the tax that you owe. I'm going to talk about this a little bit today. But if you need more info, go to irs.gov and learn about 1040 ES. I also want to talk to you about who should file this form. Now, to figure out if you should file 1040 ES for the current year, you want to make the following calculation. So I think I said something earlier before. So you take the tax you paid in the previous year, and you need to calculate 90% of the tax you estimate you will owe in the current year. So you want to compare the two, and you want to take the smaller number. For example, let's say you paid $500 as tax for the previous year. So this year you estimate that you will pay $1,000, and 90% of that is $900, right? So the smaller of the two numbers is $500. Now you want to compare the total of any withholdings and credits you might have to this number, to the $500. So if you expect to owe at least $1,000 in taxes after all deductions and credits, and your withholding and credits are expected to be less than the calculated number, in this example, $500, then you should file 1040 ES definitely. And we're showing you right now on the screen. This is basically the 2021 tax rate schedules. Please look on the screen right now. This table was lifted straight from the IRS website. So you want to use the tax rate schedules published by the IRS to determine your appropriate tax liability for the current year. So take a look here. And how do you make the payments? Now, as I said earlier, the IRS is very flexible. You can make payments weekly, bi-weekly, or whatever interval suits you, as long as you pay in full the amount due for that period. And you can also estimate your tax liability for the whole year and actually pay the estimated tax in one lump sum by the 15th of April of the current year. It's all about what works for you. It's all about what kind of liquidity status you find yourself in. Okay. Now, for estimated tax purposes, the year is divided into 4 payment periods. So you may send estimated tax payments with Form 1040 ES by mail, or you can pay online, by phone, or from your mobile device using the IRS to Go app. This is a fantastic app, by the way. You might want to double check it. Fantastic. So if you just go to irs.gov/payments to view all the options. We're showing you right now how the irs.gov, the payments platform looks like, how it looks like with all the options you have. It's there. And if you are sending a paper check or money order to the IRS, you want to attach the proper voucher. And to avoid penalties, you want to send the payment before the due date. So we're showing you right now the first payment voucher on the screen, the first one. This is how it looks like. It's due April 15th, 2021 for the year 2020, and for the year 2021 rather. So the payment voucher number 2, you can see that it is due June 15th. Payment voucher number 3, it is due September 15th. And payment voucher number 4, it is due January 18th. So this kind of gives you an idea of what you have to do, how you have to send the payment if you were to file manually. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Studio Kiwi Show. We are talking about, I'm going to give you right now 1040 ES line by line instructions, the estimated tax worksheet for individuals. Now, we're showing you right now on the screen. This is how the estimated tax worksheet looks like. So line 1, you have adjusted gross income. This is pretty straightforward. You just put your adjusted gross income there. And on line 2A, you got to put your deductions. Now, if you plan to itemize deductions, you need to enter the estimated total of your itemized deductions. If not, if you don't plan to itemize the deductions, as most people won't do this year after the government raised the standard deduction amount, so you just want to enter your standard deduction in on line 2A. And now, if you qualify for the QBI, the qualified business income deduction, you want to enter the estimated amount of that deduction on 2B, and you want to add those two lines. And number 3, just follow the instructions. So you subtract line 2C from line 1. Okay. And one thing I want to say is that number 4, the tax that you owe, and this you need to go back to the 2021 tax rate schedules to sort of figure out exactly where you fall. And we showed you right now. We showed you this tax rate schedules before. We're going to show it to you again. So this is for line 4. It's very important to have that in front of you. So line 4, you have the estimated tax schedule, and we go into line 5. This does not apply to a lot of people. This is the AMT from form 6251. If it applies to you, then enter the amount there. Line 6, you need to add lines 4 and 5, and line 7, this applies to the credits. Now, one thing that's very important here is that do not include any income tax withholding on this line. This is just the credits. And so line 7, the one thing I want to say is that we have an entire show on the top 10 or top 15 credits that apply to individual taxpayers or those who are married filing jointly. You might want to double check that. And moving on, we have line 8. You need to subtract line 7 from line 6, and line 9, self-employment tax. And of course, if you are self-employed, you have to actually put the tax there. And this is critical, one thing. And line 10, other taxes. Now, line 10, other taxes, if that applies to you, one thing you have to, there are 2 exceptions here. You need to include household. The first exception is if you need to include household employment taxes from Schedule 2, Form 1040, line 7A on this line only. If you will have federal income tax withheld from wages, pensions, annuities, gambling winnings, or other income, or you would be required to make estimated tax payment to avoid a penalty, even if you did not include household employment taxes when figuring your estimated tax. All right. So if you meet either of the above, you need to include the total of your household employment taxes on line 10. And exception 2. Of the amounts for other taxes that may be entered on Schedule 2, Form 1040, line 8, do not include on line 10 the recapture of a federal mortgage subsidy, uncollected Social Security and Medicare tax or RRTA tax on tips or group term life insurance, excise tax on excess golden parachutes payments, look back interest due under Section 167G or 460B. And so these taxes are not required to be paid until the due date of your income tax return. Now, folks, we're still moving on here. We have line 12B. So line 12B here, this is the prior year's tax. So you need to enter the prior year's tax that you figure according to the instructions in figuring your 2020. For example, if we're talking about 2020, your 2020 taxes, unless you meet one of the following exceptions. So if the AGI shown on your prior year tax return is more than $150,000 and $75,000, if married filing separately for the current year, you need to enter 110% of your past year's tax as figured next. So remember though, this does not apply to farmers or fishermen. And one thing I want to say here is that for 12C, there is the required annual payment to avoid a penalty. So this is based on your estimated tax payments. And line 13, self-explanatory. So you need to include the income tax withheld and estimated to be withheld during the current year. and include income tax withholding on pensions, annuities, certain deferred income, etc. And line 14, so you need to subtract 13 from 12C here. And if the result is 0 or less, then you just stop here. You're not required to make estimated tax payments, right? This is great. And if no, then you have to go to line 14B. And line 14B, this is where you need to subtract line 13 from 11C. Remember 11C, line 11C, that was 11C was the total current year estimated tax. And basically, if the result is less than $1,000, then you stop here. You're not required to make estimated tax payments. But if no, then you need to go to line 15. You can see on the screen here, folks, line 15. And line 15, if the first payment you are required to make is due April 15, you need to enter 1/4 of line 14A minus any overpayment that you are applying to the installment here. And on your estimated tax payment vouchers, if you are paying by check or money order. Okay, so I'm showing you on the screen here, we have a record of estimated tax payments. So you have the due dates. Here we took the year 2021, but this applies to every year. So the 15th of April, 15th of June, 15th of September, and the 15th of January if it falls on a business day. All right. Now, one thing I want to say here before we moving on here is that it's very important to follow the dates, to send the payments by the due dates if you want to avoid the underpayment penalties. And one thing that's pretty cool here is that you can even file electronically and everything is done automatically here. So you don't have to send a payment. You can actually send a payment to the IRS every week, right? So the whole notion, the whole idea of quarterly payments is not really true. You can make payments every week, every day, every month, every 2 weeks. It's all about you. All right, folks, this was it for the IRS Form 1040-ES line-by-line instructions. I was just talking to you about the estimated tax worksheet for individuals, and today I spoke to you about what the form is. Can estimated tax payments be avoided? When are estimated taxes due? When should you file Form 1040-ES? Who should file 1040-ES? How do you make payments? And what Form 1040-ES line-by-line instructions are. So, thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.